Well, I'm delighted today to be speaking to Sarah Whitelaw and Mary Ward, ahead of the PCD London networking dinner at the Grand Connaught Rooms in Covent Garden. Welcome to you both.
Hi, David.
Hi, David.
So we're going to talk about some topical things. We're going to find out a little bit more about Buzzacott. We're going to talk about some of the US tax considerations for those resident in the UK and general thoughts for UK taxpayers. But before we get into that, it'd be great to hear a little bit more about your own background and focus at Buzzacott. Perhaps, Sarah,
Sure. Yeah, so I'm a partner on the Expatriate Tax team at Buzzacott. I'm dual qualified in US and UK tax, so I'm a UK chartered tax advisor and an IRS enrolled agent on the US tax side. Been working in this space for coming up to 20 years now.
What took you into the niche in the first place? Did you just get allocated on a graduate scheme, as it were, or did you find this area interesting and sort of...
I actually joined the firm as a graduate onto the US tax team. So from day one, I was doing US tax and dealing with all sorts of different issues for US taxpayers here in the UK.
It's hugely complicated, isn't it? So was that part of what it appealed, just the sheer complexity of, multiple tax codes, and the interaction between them, I think, poses a challenge, doesn't it?
I mean, it certainly keeps us very busy for an awful lot of the year, which we might moan about, but actually I think it's really interesting, and there's so many things sort of going on and how they interact with each other.
Wonderful.
So it's great.
And Mary, what about yourself?
So thanks for having us, David.
Pleasure.
I'm Mary Ward. I'm also a partner in the Expatriate Tax team. I actually worked in the private client team at Buzzacott for a number of years, and when Buzzacott introduced the US tax practice into the bigger firm, I transitioned into the US tax team. So I've got background in UK tax and then US tax, and I've been working in our team for about 15 years.
You couldn't resist that extra challenge?
Absolutely not, no. I was a bit bored with UK tax. I thought I needed to stretch myself.
Brilliant. Well, just zooming out a bit, looking at Buzzacott as a firm, perhaps you could just tell us a little bit more about the different service lines within the firm.
Yeah, I mean, we're a top 25 UK chartered accountancy firm. We're based near St Paul's Cathedral, so right in the city of London there, with over sort of 500 staff in that building. So there's lots of different departments within the firm. Obviously, we're on the Expatriate Tax team, but we've also got a whole host of UK tax teams, audit teams, financial planning teams, and a raft of sort of niche little businesses that we've acquired over the years to just really enhance the service that we can provide to clients.
So in expatriate tax, is that perhaps people as part of larger corporates being sent to the UK and that's what gives the exposure and brings, the company as a whole looks across the top executives or something like that? Or what kind of scenario triggers the expat tax team?
Yeah, we have some clients where we work sort of engaged by the employer and looking after their employees. But equally, we have lots of clients who have sort of been in the UK for maybe 2 or 3 years, have come off that expat programme that they came over to the UK with, and they're looking for some really sort of proactive personal service, which we think we can provide to them.
Great. And I mean, do you find there are certain fields in which US-UK tax advice comes up in terms of different sectors of the economy, like whether it's private equity or hedge funds, technology, where there's a sort of transatlantic business and a high-earning executive or business owner that ends up in the UK? Are there certain sectors you see more often than not?
Certainly, I would say that, historically, a lot of our clients have been in the finance world, so bankers, more recently fund managers, but also just, people that come over on... I have a global mobility client, so we have a huge variety of industries sending US people to the UK, so they need help on their, the UK taxes when they get here, and also pre-arrival planning, so they understand the tax system and how that interacts with the US system. So, but we have quite a diverse client base made up of from various sectors, but we do also have referrals internally, as Sarah alluded to, from different teams.
So how do you work collaboratively then within the business? What kind of referrals come out of the different departments for you in expat tax?
Well, I think it's quite easy for us to be working with other teams within the firm, because we've got this single office where we're all there, or working at home now, but some of the time. But it's quite easy to make the introductions to other teams. Easy to get quick answers to clients, to keep them sort of intrigued and wanting more from the firm, really. So, you know, we would have clients who are engaged with us for sort of tax advice, tax return preparation, but they may also be, you know, have a limited company in the UK, so they need the corporate team for the audits, the accounts, financial planning, also might be involved with their investments. So it's quite, it works quite well,
Yeah,
and
you can
it's
put a
joined
team if
up.
that's what's needed.
That's right, and we're also a member of a global association of accounting firms.
Right.
So to the extent that we have tax issues in a jurisdiction that's not the US or the UK, we can sort of easily link clients up with a firm in that association, which also works quite well.
And do you find within that association there's certain jurisdictions that trigger an inquiry, you know, more often than not in terms of inbound people into the UK, or it could be anywhere in that network?
It could be anywhere. You know,
The
if
nature of
someone's
London,
wants to buy a property
Yeah.
in a different country, they're interested in sort of estate tax issues or something. It's
Yeah.
you know, it can just be sort of one asset that they're purchasing abroad whilst remaining resident here.
Okay, great. And Buzzacott have been an active member of PCD. We've done lots of different things together, digital content, little forums. They've been regular attendees at the dinner events.
Yeah.
I mean, what do you think PCD delivers for Buzzacott in terms of value add for networking?
Well, I think it just enhances the collaboration idea, really. We get a lot of referrals from investment managers and lawyers, and that's who we meet at these dinners. So we've been members for over 5 years now. We have multiple memberships across the firm. So our Expatriate Tax team has one, as well as our tax investigations team and our sort of private client UK focused team. And people are attending events sort of all over the world, which is great.
Super. Well, Mary, just to come to you on some of the detail we're going to discuss in this conversation around US tax considerations for US persons in the UK. As we said, it's a common occurrence, people arriving in London in different sectors. But could you just define for us, first of all, who a US person is and what kind of filing requirements do they have?
Indeed, yes. So, I mean, why this is relevant, why it's important to know whether a person is a US person or not. The US has an unusual tax system based on citizenship. So that means that they're only one of the 2 countries in the world that has such a system. It means that wherever their citizens are, they have a tax obligation. So regardless of where you're tax resident or physically present, you need to consider your tax affairs on an annual basis as a US person. So it's quite a broad definition. So a US person could be a citizen either by virtue of their birth or through a parent who may be an American, even if they were born outside of the US. Equally, it could be that you've had or hold a green card, which brings you in line with most of the rules for citizenship in relation to tax. Or it could be that you're just physically present in the US for a period of time and you meet the substantial presence test, which is the US domestic residency test. Yeah, and then when you are a US person, you obviously have to think about the various obligations that you have to US authorities. So typically for our clients who are mostly UK resident, they would be filing a federal tax return, occasionally a state tax return if they've got income coming from any specific state, and also various filing requirements, so reporting interests in non-US bank accounts or non-US companies, non-US trusts, anything non-US really the IRS would like to know about. So there's quite a high level of compliance when you've got a US person who's resident in the UK and has built a life here and has a financial footprint here.
And it might be they just have to catch up on filing, isn't it? There might not be tax at stake necessarily, depending on what you find. But do people then have to catch up with filing?
Quite
is there
often.
any period? I mean, could it go back?
Yes, yeah. So quite often, one of the common pitfalls that we see is that I might get a call from a new client who is American but didn't realise they had to file recently. I think Boris Johnson had to pay some tax on the disposal of a property here, and whether he'd filed or not before, I'm not sure. But I think he was a bit disgruntled. But that put sort of something out into the media about the necessity to file as a US person resident outside of the US. And if you haven't filed, there are a number of amnesties available where you can surrender yourself back into the US tax system. And we can obviously help with that, advise clients of the best way forward depending on their set of circumstances. So there are lots of things to consider as a US person, especially when you're not resident in the US. It becomes more complicated.
And what are the key headline rates of tax at the moment in the US for taxpayers?
So the top US rate at the moment is 37%, the top federal tax rate. Probably worth noting that the bands for the different income levels are broader than they are in the UK. And of course our UK top tax rate is 45%, so there is a difference between the US and UK rates. Probably worth bearing in mind that there are also state taxes which can vary up to sort of 13%. So for a US resident, their tax exposure would be higher than potentially their UK tax if they were resident here. But yeah, so there is a difference between the two tax systems, but we do have a treaty between the US and the UK, the double tax treaty, which allows offset of one against the other, depending on the source of the income or the gain.
And did you see during the pandemic, if clients have spent more time perhaps in the US where they've got property, there was less movement, people have actually maybe did exceed some of these day counts and trigger liabilities that they hadn't thought of? Have you seen that sort of playing out? The way people are spending their time has been different over the last few years. Has that caused issues unexpectedly?
So. Yeah, for some clients, definitely. You know, those that are sort of perhaps trying to prevent being resident in the UK, for example, the sort of COVID relief rules were fairly minimal in terms of, you know, the number of days that you could stay here. It wasn't very generous, really. So some people did get caught. Again, you know, the tax treaty does come into play and protect people in those situations, because you do have instances where clients can be resident both under domestic rules in the US and the UK. And then you're looking at the tax treaty, the tiebreaker rules to see, well, which one have you actually got the closest connection to? So you'll always end up being in one or the other. But yes, we did see instances. I think the other thing we saw quite typically in the US is people working from home or travelling in and out of states, sort of commuting or not commuting if they're working at home, and sort of the states fighting over who's going to actually get the tax for workday income.
And I mean, what are some of the most common pitfalls or traps that you see, you know, time and again occurring?
So we see lots of clients coming over to the UK with investment portfolios which are invested in perhaps a US mutual fund, which is not necessarily going to be tax efficient in the UK if it doesn't actually report to HMRC. So the offshore income gain regime, taxing disposals at income rates rather than capital gains rates. And
that problem doesn't necessarily come to light initially, does it? It might roll on. And
That's
then it's
right.
when they come to need the money in the UK is
and
when
trigger a
they've
disposal.
had a nasty surprise.
That's right.
Yeah.
And it's why, you know, we love to be in contact with our clients before they actually get to the UK, if possible.
Yeah.
I mean, they may not have heard of Buzzacott if they're living in the US, but hopefully they're in touch with someone here, an immigration advisor, a lawyer. Exactly. So that they can get some of these things sorted out before they actually trigger residency here.
Okay, terrific. And so, Mary, in terms of the sort of typical life cycle you might see of a client coming into the UK and into the tax system and staying here for a few years, what is it that you see? We mentioned there pre-arrival planning being so important. Could you talk us through the life cycle you see?
I think one of the most important things that we explain to our new clients when they come to the UK is the offset between the US and the UK tax credits. It's quite important that because we have a different tax year in the US to the UK, so the US works to a 31st December fiscal year end, we have a 5th of April, so there is immediately a mismatch there. And generally the US will allow tax credits for UK taxes paid as long as they've been paid in the year that the income event arises. So you can see how there could be a mismatch there. And that can really catch clients out, even though the treaty covers the double taxation. Because of the IRS rules around the allowance of the tax credits, it's important that they're paid at the appropriate time. So often clients don't understand that, so we like to make that clear, just in case they have a large capital gain, for example, when they're here, and then forget to tell us about it until later on, and the sort of ship has sailed. So there's potential for being taxed twice there. One of the big things we see and we explain to clients a lot is around owning and selling non-US property and financing that property. So the rules differ in the US and the UK. So in the UK we get full exemption if you've owned and lived in a property for the whole period of ownership, whereas the US has a different system where potentially you could have an element of any gain on the sale of your home subjected to US tax. So that's limited, and that we can provide planning around that. So if it's a jointly owned property, there are ways of structuring or altering the ownership of the property before you sell it to avoid that dry US tax charge. In addition, there is, I didn't mention, a 3.8% net investment income tax in the US on gains and interest investment income. So, potentially you've got a 23.8% hit on the sale of your home in the UK, which is never very good news for any client to understand. I guess there are other life events, maybe.
If they're spending a longer time in the UK, they're approaching becoming deemed domicile.
Of course.
Are trusts useful for Americans in that context?
Absolutely, yeah. When clients arrive in the UK, their domicile status in the first instance, and then explaining to them the complexities of the remittance basis and the change in the rules after 7 out of 9 years, and again, after 15 years, and one, as you've mentioned, one way to plan around that, if you have offshore wealth, is to use an excluded property trust. That's still available. So all of that stuff we would advise on, and any sort of key changes in their circumstances. So we very much urge clients to speak to us before they make the changes, when they're in the thinking about it stage, rather than after the event, because our job, our role is to kind of make these changes as tax efficient as possible. Yeah. We can't necessarily always negate any tax charge, but because there are the two systems to think about, it's important to think about it beforehand and try to plan around it.
And Sarah, I understand you work a lot with divorce lawyers, working on clients, I guess, where there's a US-UK connection. Perhaps tell us a little bit more about that.
Yeah, sure. Yeah, I mean, it's definitely the family lawyers that sort of refer that work to us. So if one or both of the spouses are US citizens, then there's a clear need to factor in any US tax liabilities as well as UK tax liabilities into the sort of divorce settlement agreement. It can be that complexities arise where you have a US citizen spouse transferring an asset to a non-citizen spouse, because that will be treated as a disposal, triggering a gain at that point, even though it's just passing between the two. So factoring that in is important, and we sort of get called upon to prepare calculations to illustrate what might be due both at the time of the transfer and also on a future sale, so that can be taken into account.
Okay, and Mary, I mean, what's the benefit of looking at these things in advance? I mean, I imagine a big part of the benefit is fewer surprises. If you're getting surprises, and once that liability is there, I imagine that it's hard to do anything about it.
It's closing the door after the horse has bolted, so to speak. Yeah, so definitely. And oftentimes there are ways that we can, absolutely minimise a client's tax exposure. So, none of our clients want to pay more tax than they need to. So that's the main benefit of planning in advance. And there are ways of structuring, as I mentioned, with the property sale, on divorce, on expatriation, to avoid unnecessary payment of tax.
I mean, on the expatriation side, I mean, is that something when people realise there are these liabilities, they might want to take themselves out the US tax net, but there's complexity to making that decision, isn't there? Do you help people through that?
We have conversations. Yeah. I think it's not just the tax aspect that you have to deal with, so you have to be quite sensitive with a client and sort of not shoehorn them into making a decision just because of tax implications. They need to seek immigration advice as well, so we would refer them on for that. But certainly, yes, that, you know, the cost of some of these things can make having both citizenships expensive. And if they know that their sort of long-term future is here in the UK, then it's something to think about.
But do many look at the bill and think, actually, I'll just make sure my annual compliance is, I'll just keep my nose clean and I'll do my compliance, and actually to give up the passport is a big step,
it's a big
isn't
thing. And, you know, if you can limit the double taxation exposure, then and sort of be organised and know when you're making your tax payments, then it can work okay.
Fantastic. Well, look, Sarah and Mary, been great to talk to you today, and we look forward to sharing this interview.
Thank you, David.